welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup of the day and the key strategies that top market experts will help you with as far as today's market session is concerned. And of course, we will be looking at what are the key factors that will influence the market trend as we move along going forward as well. We'll also focus on a whole host of earnings as they have started to trickle in, and we'll also focus on the key sectors and stocks that should be on top of your radar post the recent tariff relief as well. As of yesterday, we did see, bulls getting a sharp green welcome when we saw across the board a sea of green in trade. Remember, the Nifty is also, as of yesterday, with that sharp up move, covered all the losses that were seen after US President Donald Trump's reciprocal tariffs that were announced on April 2nd. This made India the first major equity market globally in the Asian markets, of course, to erase the tariff-induced losses. In contrast, we've seen the broader gauge of Asian equities still remain more than 3% lower since the tariff announcements have been made. In fact, the BSE-listed market cap also rose by about 11 lakh crore rupees, benefiting the investors at large. A large part of buying also was helped by the FII buying that we saw overnight. We saw 6,065 odd crore rupees of money being poured in by the FIs in the equity markets. DIIs also, however, selling 1951 odd crore rupees in sales. What is happening today, this morning, and overnight trading session? Some of those gains across the board were given up. So Dow Jones, Nasdaq, S&P, we did see a mixed close as far as yesterday's trading action is concerned. Asian markets also opening tad lower as well throughout the course of the day, and the GIFT Nifty is also pointing out to a slightly muted with a negative start at this point in time. But remember, we also have a whole host of domestic cues to walk around with. We have inflation that has turned benign. Retail inflation is at the lowest rate in nearly 6 years now. Remember, investors will react to the CPI or the retail inflation that is now cooled 3.3% in March from 3.5% in February, and the street, remember, had actually pegged it higher at 3.59%, so much better than the street estimates as far as the inflation figures are concerned, and much below the RBI's comfort band of 4% as well. So it really spells good news at this point in time. This decline was largely driven by a significant decline in the food prices as well. So that's also going to be important to watch out for. I think since January onwards, we have been seeing a cool off in inflation. Remember, the previous 18 months or so have been pretty tricky, and now things are improving as far as inflation figures are concerned. As far as the earnings picture go, Wipro, Angel One will be reporting their quarterly earnings today. We have IRIDA, ICICI Lombard and ICICI Pru that will be reacting to their numbers today as well. And we have a whole host of stocks also in our focus list in trades today. We have IndusInd Bank that will be in focus. Remember, yesterday the stock was much higher, and the bank has reported the external audit has found 1,979 odd crore rupees of a reduction in the bank's net worth due to the discrepancies that they had talked about. This equals 2.27% of the bank's net worth, and this is lower than the bank's own estimate as well. So this is much better. The bank will now include these findings in the fiscal year 2025 statements, and this follows the bank's appointment of independent firm last month to examine all the issues for its derivatives portfolio as well. That will be important to watch. Earnings front, you'll watch out for ICICI Lombard and ICICI Pru. Good numbers coming in there. The companies posted a 2% uptick decline as far as the net profit is concerned at 509 odd crore rupees versus 520 odd crore rupees same quarter last year. The company's profit after tax, however, has risen sharply by 30.7%. What we have also seen is that an improvement over FY24 of 1919 odd crore rupees of profit that the company had posted. The gross premium income for March has grown by 10%. We've seen operating profit, however, drop by about 25.6%. ICICI Prudential Life, the company has reported annualized premium equivalent of 3,500 crores. However, this has fallen short of some of the street estimates. The value of new businesses for the quarter has stood at 795 odd crore rupees, again below the poll estimates. Another stock that I'll be watching out for today is Gensol Engineering. SEBI has issued an interim order against Gensol Engineering and its promoters Anmol Singh Jaggi and Puneet Singh Jaggi following allegations of fund misappropriation and misleading disclosures, and SEBI has now restrained the promoters from holding any directorial or key managerial positions in the company, barred them from stock markets and dealing with the securities, buying, selling, or dealing in securities as well. So we will have to see how that stock also reacts in trades today. IRIDA, of course, will be important to understand from both aspects. What is the exposure to Gensol that they have, but the earnings have been much better. 48 or 49% jump in the fourth quarter net profit to over 500 crore rupees. Robust interest income we have seen of 47% growth coming in for the quarter as well. And so something that we'll be watching out for again. PB FinTech will be important to watch. The parent firm of Policy Bazaar has announced a subsidiary, PB Pay Private Limited, has received an in-principle authorization from Reserve Bank of India to operate as an online payment aggregator. And this development follows early disclosures made by the company on March 20th and April 9th regarding the formation of PB Pay with object of seeking registration as NBFC company. So those are some of the stocks that we're watching out for. Let's welcome our guest on board. We have Mr. Gaurang Shah joining in, Senior Vice President of Geojit Investments, and we have a lot to discuss with him. Warm welcome. Good morning to you, Gaurang, and thank you so much for taking the time out. It's always a pleasure to host you. And this time we meet after the tariff pause has been announced, a 90-day pause. So, the long weekend also worked well for us. Yesterday we covered up all the losses that we incurred post the tariff announcement. But I think the bigger question is this again going to be temporary? Because is this again going to be, sure that the uncertainty on tariffs is behind us? How difficult is that to say?
Well, thank you, Sakshi, and morning to all of you all. Yeah, we are meeting after the tariff impact, but the fact of the matter is that the market has recouped all its losses during this time since we did not meet, Sakshi, and it's good to see that we have regained all the losses which we had to incur because of the post 2nd of April situation. It's very difficult to answer your questions, actually, because we forget about us. Even Donald Trump doesn't know what he's going to do next, right? So who are we to guess? We'll have to only face the situation and circumstances as they unfold. He's spoken about pharma and electronics earlier many times. Now he's going to do a rethinking on that. 90-day moratorium as so-called reprieve for US because of the situation of bond yields over there. People are screaming actually, Sakshi. I don't need to go into detail. You and me all know about it, what happened over the last 15 days or last 14 or 13 odd days since the time he has announced these tariffs. But my sense is that we are possibly in a better situation. I have mentioned this earlier also, Sakshi, when we were about to face the tariff sword or, the impact of tariff announcement. And I'm only convinced and my confidence is getting reinforced in terms of the belief that I already had earlier about Indian economy, about Indian corporate earnings, about Indian capital markets. So, we had a good recovery. Possibly we may sway a little bit. We've got a truncated week. Monday was a holiday. Friday again is a holiday, Sakshi. Yes. So we've got a 3-day week as far as trading is concerned. Possibly some gains that we've seen so far would be let off maybe today, tomorrow. But all dips should be a buying opportunity according to me.
All this should be a buying opportunity, and India is probably a better off, something that Gaurang maintained even in our last conversation as well. Just to take this point a little forward, Gaurang, to understand, how China plus one as a strategy is making a big comeback. As you also point out that India seems to be in a better off position, not just because China has been imposed with a heavy 145% unbelievable, tariff rate, but at the same time, Indian officials now have this 90-day of a period to negotiate deals better on each sectors that matter to us, each sectors that need protection, and probably, strategize this in a way better, position for India than we could have done that in a very short time frame period that we had got earlier. What do you anticipate from India? What's the position that India government takes as far as each sectors are concerned? And of course, China plus one as a strategy making a comeback, what is the kind of advantage that India takes?
See, actually, I believe in all these things, but the only problem is, which is one of the bigger problems. I mean, if you want to face China, you need to be, excuse me, first of all, cost content, competitive. And the
Yeah.
second is to improve on the quality. I'm sorry to say that though we are trying our efforts, but we are not up to the mark. And if you want to go and compete with China or China, take advantage of China plus one, Europe plus one, then first of all, Indian corporates, Indian government, I mean, I'm not blaming the entire thing on the Indian government because as and when it is necessary, they do changes in the policies, they bring in new policies, Sakshi, and they implement at ground level. It is up to the corporates, right, to deliver on both counts, quality and quantity, and competitiveness. Okay. If you are not able to do that, then everything is out of the window. You are not going to take that advantage. So my understanding and what I have seen and what we have witnessed in the history gone by is that we are capable of doing it, but unfortunately we feel very, very terribly short of quality and competitiveness and quantity. So I think first of all we need to improve that, and I hope we get our senses right. And then
Hmm.
we are in some position to compete with what China has been doing over the last 15, 20 years, at least from 2000 till maybe about 2018. And 2020, I say that because of the post-COVID and the impact on Chinese economy. So we have to do that. And I hope we learn our lessons, and from our mistakes, we gain some kind of experience and we improve upon that. If all that is in place, then I think, look, we are already clocking 6% plus GDP. China
Yes.
is struggling. I mean, it is given 5.4, the latest number. This is before the tariff impacts, actually. Remember, once the
Yes.
tariff, if it comes in 3 months, 6 months down, this 5.4 is going to go down to 5 or maybe below 5. Who knows?
Okay.
So we are in a much better condition. The inflation is coming down over here. Rest of the
Yes.
world is struggling. Interest rates is coming down. Rest of the world is struggling. So if we deliver
Yes.
on Q4, then I think we are in a better place. And like I said, competitiveness in terms of quality and cost effectiveness.
Fair point. We'll keep an eye on all of these factors and how they are played up. The other important aspect is beyond equities, gold as an asset class. There is no losing of sheen any so whatsoever. What do we see on gold today is again another record on the MCX, 1,000 rupee of an uptick again, 94,462 rupees on the MCX as far as gold is concerned now. So it's a record high again. How does one really get their heads around the fact that there is no stopping in this rally of gold at this point in time? I think we discussed even last time, the FOMO is unbelievable. Everybody around me is just asking, should I keep investing in gold at this point in time? How much more will gold rally from here? And it's again the same thing. I was drawing parallels when the markets were soaring, I think in the middle of 2024, everybody just jumped their guns and put all their money. And then from the last 5 months, they're feeling stuck because they put their money right on top. And now for gold, when it's already rallied 32% in FY25, now people are, feeling the FOMO at 90,000 plus they want to invest, and 94,000 today. 1 lakh is just a mere number. It could be hit any time. But what is the approach that retail investors take?
Sakshi, you know my approach, right, towards gold and equity. And somewhere I had mentioned, I think it was about a year or 2 years back, ऐसे ही मतलब हम दोस्त मिलके बातें कर रहे थे तो my friends asked me, what do you think about Sensex, Nifty and gold? So I said, nahi, Sensex, I beg your pardon, Sensex, gold and silver, not
You had
Nifty.
said this on our channel. I remember that we can still pull out that bite. You said तीनों में
So
1 lakh touch होगा. But it's just
exactly.
a matter of when and not if. This is what I remember what you said.
Yeah, so you're absolutely bang on, Sakshi. So Chandi, we have seen silver at 1 lakh. Gold, we are just short of 5-6% of that target of 1 lakh. Sensex, maybe, because of whatever has happened around the world, we may spend a little bit more time before going towards that 1 lakh mark. And I only limit to 1 lakh. I mean, all these things the gold, silver, and Sensex can go beyond a lakh. I'm absolutely convinced about it. So as far as gold is concerned, I think use your ETFs or mutual fund golds as a platform to invest. Physical gold is also something that you can invest in. Gold sovereign bonds have been put on full stop because of the situation that the government has landed into. And let me tell you one thing, America as an economy, we all know they have been busy printing dollars. They have not been able to maintain their balance between printing of currencies, that is dollar, and reserves in terms of gold. Central bank across the globes have been buying gold. There is tremendous amount of shortfall as far as balancing that equation is concerned. And I think as American economy, if I'm using the word if, Sakshi, has to
Yeah,
go into recession, I
yeah.
think, and of course, not to forget, they have got huge amount. 30% of American bonds are held by other countries, not in China, not in US,
Mm,
but outside US. China is one of
mm,
the biggest. If they have to liquidate that, if the refinance doesn't happen,
mm.
then the amount of currency that US will have to print is going to be humongous. And in that situation, when the realization or the wisdom dwells upon them and the kind of gold that they will have to buy, other than the other central banks that have been buying, I think it's going to be a situation wherein gold. My target, if you ask me, Sakshi, for December 25, somewhere close to about 3,500 to $3,700 an ounce. And I've been
Okay.
also, yeah, so that will translate into beyond 1 lakh, if I'm not mistaken, gold
Mm,
prices. And by
mm.
2030, what I have read and what I have understood, gold could be, I'm talking about dollar terms, could easily be somewhere close to about $6,000 by 2030.
Wow. Okay. So for those who actually are looking to play up for the next 5 years or so, this may be a good time to look at again in a staggered fashion. Look at your ETFs because the targets could only be seen rising from here. 3,500, $3,700 announced till the end of December 2025, as Gaurang mentions, and over the next many years, 6,000 odd dollars announced could also be seen. So if one is really looking at and feeling, the sweat as far as the gold prices are concerned, this is only going to be rallying. Of course, there will be dips and volatility, but there has to be, some exposure in your diversified portfolio to gold and silver, as Gaurang has mentioned. Let's quickly look at how the markets are settling in the pre-open trade, and we'll come back to our conversation with Gaurang again. For the Nifty, there's a slight uptick that we can definitely look at, 23,344. On the Nifty, just flat with a positive bias is what we could be looking at as far as open is concerned. Let's look at a few stocks that we are watching out for today. Remember, Gensol is something that we will be really looking out for. SEBI has barred the promoters from dealing in securities. They're going to be incorporating a forensic audit as well. So we'll have to see how this plays out. 5% lower circuit indicated as far as the pre-open is concerned. Beyond this, we have a lot of other stock earnings. IRIDA, Q4 AUM has jumped strongly, and we've also seen the NII rise as well, much better than the estimates as far as the earnings are concerned. So strong earnings, it's an indication of a positive one. But I think the sentiments will be kept in check because we'll have to find out what the exposure to Gensol is. First of all, the stock is getting an indication of a 6% uptick in the pre-open trade. Mixed set of earnings for ICICI Prudential as well as ICICI Lombard. Slight uptick can be seen on both. IndusInd Bank will also be important to watch out for. It indicates an opening about 1.5% higher in trade. Again, the external probe has found derivative discrepancies to the tune of somewhere around 2.5% of the overall net worth, but slightly below what the estimates were. So much, so an indication that could be positive. Remember, IndusInd Bank was the top mover in the stock market yesterday on the Nifty, and we'll see how that momentum carries on. There'll be gas-related stocks that will be in focus. Gujarat Gas, Adani Total Gas, GAIL, these kind of stocks will be in focus. APM gas allocation has been reduced again by 18 odd percent, so there could be some dampening effect on that. Then we have oil and gas space. You also have new oil blocks that have been found. Vedanta and Oil India could be reacting to that. So some of those stocks could also be in the positive. PB FinTech also incorporating PB Pay, and that could also be showing us some ticks on the higher side on that incorporation as well. So we'll be looking at all of these stocks once they open in. Meanwhile, of course, banking space will be in focus. Yesterday, we were telling you that following the RBI's rate cuts, a lot of banks have already started to pass on that on lending front, but most of them have also started to slash the deposit rates. Today, ICICI Bank has mentioned that in their savings account, they have cut the interest rates by 25 basis points yet again. So keep an eye out on that. That's news just coming in. So more and more banks are now talking about reducing their savings rates and deposit rates following RBI's repo rate cuts. Definitely important to watch out for. Let's come back to our conversation with Gaurang now. Gaurang, let's start off with the earnings front and the numbers that are coming in. Insurance play, ICICI Pru, ICICI Lombard. What do you have to say on the earnings? PB FinTech will also be in focus because of PB that's introducing. So a lot of these insurance payment spaces will be in focus today.
Well, so our take on the insurance, life insurance and both general insurance. General insurance, non-life insurance companies will strive much better compared to life insurance. Like ICICI Lombard, Sakshi, where we have coverage. On life insurance, I have mentioned it earlier that it is going to be a while, though there has been an improvement in terms of insurance collected and new insurance coming in as of the run rate. And that is purely because of the kind of large sums that are getting assured. Larger the sum assured, larger the outflow for the person who's taking the insurance, and better for the company who's giving out that insurance. And there has been a decent improvement. Of course, there are some changes also that has been taken by the regulator, which also has its impact on the performance of these companies. But remain positive on LIC, SBI Life, HDFC Life, and ICICI Prudential Life, purely from 2 year plus kind of perspective.
Okay. Let's also welcome Arpit Beribal, analyst of derivatives at Wealth Management, Motilal Oswal Financial Services, to join the conversation. Arpit, warm welcome. Good morning to you. Tell us what you have to say about the markets today. Where will you keep an eye out on, Nifty or Nifty Bank, after yesterday's strong move?
Very good morning to all. So, if you see overall the Nifty and Bank Nifty, first we'll talk about Nifty. We have seen a very sharp recovery in last few days. So, if we talk about right at the start of the April, where Nifty was around 23,500, it corrected towards 21,900, and then again, in last couple of days, we've seen a strong recovery. So, technically on the weekly scale, Nifty has formed a strong bullish candle, and yesterday we've seen a big gap up opening. The good part it was able to hold its gains. So overall, looking at the chart wise, Nifty, the supports have been shifted higher. And one good part that I would like to add is India VIX that declined significantly yesterday, almost by 18 to 20%. That clearly indicates that there is some stability that is rebound to happen. So talking about the levels for Nifty, so Nifty yesterday closed around 23,350 levels. So look at the option data. 23,500 is the maximum call OI, whereas at the downside 23,200, 23,100 is the put OI data. So we are expecting after a sharp up move, index is likely to consolidate between this range between 23,100 to 23,350, 23,500 zones. Now talking about Bank Nifty, so Bank Nifty is relatively a huge outperformer. So we have been talking about Bank Nifty as we have seen good outperformance in the entire banking and NBFC space.
Yeah.
So banking also yesterday opened a big gap up by almost 1,200, 1,300 points, around 52,200 levels. And if we talk about just before when the fall started, initial hurdle for Bank Nifty was 52,000 levels. And yesterday it managed to surpass above that, managed to close above that. And we have seen a very good buying interest across the private banks and the NBFCs. So ICICI Bank, HDFC Bank, they have a result on this coming weekend. So definitely there would be some more action in the banking space. So as compared to Nifty to Bank Nifty is relatively outperforming, and we are more bullish on Bank Nifty for target towards 53,000 with major support around 52,000 levels.
Okay, the Nifty has opened tad bit lower than the flat line, 23,295 being seen at this point in time, 35 points lower in trade. The Nifty Bank, however, is in the green, about 0.3% up. But you also have the mid caps that are opening higher by 0.2% odd. The advance decline ratio is also skewed towards the positive, so that's good. 1142 advances to 384 declines at this point in time. The IT index is down by about 1% now, so that's the space that is weighing on the sentiments at this point in time, even though the Nifty Bank is higher. You also have metals and FMCG now slipping into the red, about 0.25% of a drop for both these sectors at this point in time too. You also have the pharma and the auto stocks now down by about 0.4% each. So there is, sectoral action which is also slipping away. Barring financials and the Nifty Bank, most of the sectors are actually giving up some of their gains of yesterday. So you actually see CPSE index, autos, capital goods, oil and gas, even the metal space, FMCG space, all of them slightly lower in trade. Now the Nifty is down by 40 odd percent, 40 odd points at this point in time. Let's look at the realty ones. Realty index is still up about 0.25%. Remember, this was up 5.5% higher in trade, so that continues to carry on with the momentum yesterday. Let's look at the top laggards at this point. You have Maruti, you have Eternal, that's Zomato, HCL Tech, Tech Mahindra. These are the stocks that are actually down in trade. Tata Consumer Products, Sun Pharma, that's declining among the top losers. But what's actually hovering higher, even in this week's setup, is Eicher Motors, Shriram Finance, HDFC Bank also hovering higher, 0.7% up. IndusInd Bank is up by about 0.5%. Axis Bank about 0.5% up. HDFC Life is another one that's actually been moving on the higher side at this point in time as well. Let's get back to our conversation with Gaurang now. Gaurang, banks, financials, I think this will be the next up for earnings, as Arpit also points out. What's your expectation here from the earnings front for the large private sector banks? They have been showing us some recovery over the last couple of weeks as well. Do you think the earnings will provide further momentum? Is the expectation good on that front?
Well, Sakshi, to be very honest, I can't comment on short term. But if you ask me from a long term point of view, if I have to purely look at the business updates and the advanced tax,
Yes.
they tell you a story which is a long term growth story, right? You are in a very, like I mentioned in my opening remarks when we started the show, that India is the only place on earth where we are seeing inflation at a lower rate. Yesterday we saw an inflation number which was again well below. We are witnessing two cuts after a 5-year pause from Reserve Bank of India, and a likely possibility of two more cuts in form of 0.25 by the time we say goodbye to calendar 2025 December. In that kind of a scenario and a backdrop of credit line or demand for credit line is increasing, your asset quality is improving both on the net and the gross front. You've got provisionings coming back, and the long-term growth trajectory looks extremely strong. I've always maintained one stance that if India has to become the next trillion-dollar economy, and India's aspiration is to become the largest manufacturing hub and outsource to the world rather than look at the world and import, then in that scenario, you're going to have two sectors which will need contribution. That is, of course, banking, financials, and of course, power. Without these two, we are not going to go anywhere closer to what we aspire for. So I expect the banking sector to do well, not only for this quarter, but for a couple of more quarters and earnings to come by from a long-term point of view. And I would also go to the extent of saying that you should have banking and finance as a core portfolio if you have a decent portfolio exposure.
Okay, got that. So you must definitely have core portfolio exposure to banks and financials. Arpit, your top choices from the banks?
Sakshi, if we talk about from the banking, we'll focus mainly on the private banks. If you look at the chart setup of ICICI Bank, Kotak Bank, this too has been a huge outperformer. So first would be ICICI Bank. So in spite of sharp correction that we have seen in last couple of months, that started from September onwards 2024, ICICI Bank has been a huge outperformer. So on the monthly time frame, if we see the stock is in clear uptrend, the base of the stock is shifting higher from 1100 to 1200, from 1200 to 1300. So slowly, steadily, we expect that another up move will likely to continue, and this is likely to outperform from next 3 to 6 months perspective towards 1450, 1550, 1600 plus levels. So ICICI Bank would be a preferred pick within the private bank. Second would be followed by Kotak Bank. So if we see the chart structure of Kotak Bank on monthly scale, so almost for the last 3 years, it was in a range between 1800 to 2100 levels. And from last 3 years, it was trading in a broader range. But finally, this range breakout has been seen in this past couple of months. And definitely from here on, the risk reward is quite favorable. And we can see good upside of 10 to 12% positionally in Kotak Bank going forward. So this too would be a preferred picks within the banking space. Along with that, one more stock that I would like to focus upon from the NBFC space would be Bajaj Finance. So we have been quite bullish on this counter, and looking at the chart setup wise, the setup is very strong, and definitely looking at the monthly setup, a range breakout above 8,300 levels, and we have seen a good movement almost 4,000 points in last couple of months when we have seen too much volatility in the market. But definitely there is more headroom for this counter towards 9,500, 10,000 plus levels. So these three counters would be on a radar from the banking and the NBFC space.
Okay, got that. We'll keep an eye there. Gaurang, Gensol, that's something that we should definitely at least advise on our viewers on at this point in time. Scathing remarks made by SEBI, fund diversion, and of course a forensic audit that will be taken. Promoters have been barred from securities as well. We've already seen about 84-85% of a loss on the stock price this year so far on a year-to-date basis. Of course, those having the stock in their portfolios are you're definitely feeling the pinch. But what exactly would you say on this one?
Honestly, I think first the question has to be asked to the auditors of the company. Am I right, Sakshi? What were they signing? I mean, were they busy giving
Yes.
autographs to people? Or were they having some responsibility on their shoulder while doing that of signing a report? So I think first of all, the authorities should act upon them. Then, of course, comes the promoters who are the child, brainchild behind whatever they've been doing. Unfortunate, of course, we don't cover Gensol, so I won't give you a specific in terms of buy, sell, and
Yeah.
hold. But through your channel, number of times I have mentioned one thing, that for the love of God, please use your common sense and fine sense of judgment. Don't go and put your money, hard-earned money, or money that you've saved with your hard-earned earning into something which you don't know. Buy quality, don't buy quantity is something that I've always mentioned. I continue to maintain that. And I'll again say the same thing, that don't go for unknown names. Don't go what your uncle, auntie, mama, mommy, chacha, chachi, or your friend is telling you. Do your homework for the love of God and then put your money. Look, exposure to equity market is exposure to all kind of risk, local as well as global. You can't. Then if stock market was so easy to make money, we wouldn't have beggars in the world, right? So every beggar would be sitting with a smartphone on a signal and punting on the way to glory. So I
Very
mean, be careful what you're buying. Just don't buy something because the stock has corrected from 1,000 to 20. That 20 rupees can become 2 rupees.
yes. Absolutely. Very well pointed out, and I think that goes on for all our viewers to definitely keep an eye out on. And at this point in time, when the world is going through a lot of uncertainties, it's definitely not going to be very easy. So you have to be really careful with what your exposure to equity is, and whether it's to fundamental quality good stocks in your portfolio. Irida, that's another one, Gaurang. It's come out with a strong set of numbers. I mean, the stock has already moved up about 20-27% odd in this 1 month so far, but it had cooled off quite a bit from the peak as well. Promising earnings coming through. Do you think the times of glory can really be seen again on this one? Do you think investors who've been passionate about these renewable energy names should again look at Irida at the current levels again for a fresh move? And or there going to be some concern on Gensol exposure? Of course, we'll be speaking to management to find out that out today. But what's the sense that you have on IRIDA?
Also, we have recently come out with a buyer recommendation on IREDA, and we've discussed this stock right from the time it got listed. Am I right, Sakshi?
Yeah, yeah.
During the IPO time, also, we had come out with a subscribe recommendation for the IPO. This is a growth story on the aspiration that India has in terms of accomplishing its deficit in terms of power requirement. I have seen 40 degrees plus, especially from where you are, Sakshi. I think it would be much more than that in terms of the heat. And we have yet to see the rest of April and the May's. And then, of course, the early part of June when we'll have the first showers coming in and the rain gods being kind enough. Luckily, I mean, the Met Department has
Yes,
predicted above rainfall for this monsoon season.
yes.
So have a longish time horizon. I mean, I can't recommend for 3, 6 months or 9 months, but yeah, a year and a half, two plus on a company like IREDA, which is into financing of clean and green power energy projects. I think it's a great thing to look at.
Great theme to look at on that front. Let's get Arpit also to talk about it. Irida, today would you be buying despite the strong move that we've seen today and of course over the week?
So Sakshi, if you look at the bigger time frame structure on the weekly and the monthly scale, so for past almost 6 to 7 months, the stock was in corrective phase. However, if you see the rally where it started way back in June 24, the stock has taken support near around 145, 150 levels, and on the monthly scale, after a long time, it has negative formation lower highs. So from a positional perspective, definitely the stock has formed a strong base near 145, 150 levels, and on the immediate basis 178, 180 where the stock is currently trading, closing above that definitely can headroom towards 190, 200 levels on the immediate basis. So from a risk reward, from a long term perspective, definitely the stock can be bought at current levels with a major support around 155, 160 for an upside move towards 200 and then 220 plus levels.
Okay, fair point. We'll definitely keep an eye out on that as well. Irida, there for all our viewers to see at this point. Let's also get in a sense from Gaurang on some of the other spaces. Yesterday we did see a lot of EMS plays again start to play up. Keynes, Dixons of the world. We've seen auto part companies also rally in trade. Auto stocks coming back. With that relief coming in on the tariff front. What's the approach now on these spaces which were earlier being seen as slightly vulnerable?
Vulnerable, yes, because we don't know what Trump is going to do, am I right? And
Yeah,
that's what I mentioned. I mean, who are we to guess what is going on in his mind when he
yeah,
himself doesn't know what he's going to do next? So
yeah.
these are going to be targets of news flows from US announcements made by President Trump. But minus that, if I have to look at the opportunities, I think there are tremendous opportunities. Uh, we are positive on M&M, Maruti, Tata Motor, TVS Motors, Bajaj Auto, Hero MotoCorp, Ashok Leyland, Escorts, Eicher, Electra Green Tech. All these names we are positive, and we are equally positive on auto ancillary as well as tire manufacturing companies. We believe, Sakshi, that if you are positive on auto, then you need to be positive on battery, tire, as well as OEM segment because they are all interlinked, to each other.
Okay. And basis the earnings, have you also come out with an outlook, Gaurang, with your own research firm to talk about, where do you find outperformance coming in for this quarter?
So our sense is that banking and finance will do well, as we discussed earlier, Sakshi.
Yeah.
Autos will deliver decent returns. Cement, cap goods engineering,
Okay.
defense, power. These are some sectors which are likely to do well. Improvement from last quarter to this quarter, FMCG is likely to do well because of lower cost and lower crude oil prices. Something that is not going to do well, I think, uh, IT, metals, and oil and gas.
Okay.
These are IT will not be a worst performer, but it would be just tag below after what we've seen from TCS. But metals and oil and gas, I think that's something that you need to worry about for some time.
Metals, oil and gas, and slightly IT. These could be the caution zones, but banks' financials could be performing very well. Cement, capital goods, spaces in the earnings could be outperforming too. All right, Garang, thank you so much for being with
Yes,
us on
Sakshi.
the show. Always appreciate your time and those fantastic insights that you share. Hope you have a great time and a fantastic upcoming long weekend ahead, and we'll see you soon. Okay, then let's conversation with Arpit also continues. Arpit, any sense after the first 15-minute candle is out, are we in for some recovery after initial hiccup that we've seen today?
Sakshi, if you talk about Nifty, so what we have seen in last couple of weeks to months, generally Nifty is like major component of financial and IT. And IT is relatively underperforming, because of which relatively Nifty is relatively underperforming. So our sense is that Nifty is likely to consolidate. We have seen almost 1,000 to 1,200 points recovery in last couple of days, And going forward for tomorrow, we have an expiry, then we have an off, so it's a truncated week. So looking at the overall data wise and the level wise, our images says that Nifty immediate support is 23,200, 250 levels. Until it holds above this levels, we can see an upside towards 23,450, 23,500 levels. So Nifty is expecting to be a range bound within 150 points in that range. The real outperformer will be banking space. As you have seen yesterday, a sharp range breakout above 52,000 levels. And the good part, we have seen that it has managed to close above 52,000 levels. So the major momentum would be seen overall in the banking pack. And ahead of its two major private bank results that are there, HDFC and ICICI. So we're expecting good momentum. Initially, the major hurdle for Bank Nifty was around 52,000, 52,200, and that is likely to be a support. Whereas on the upside, 53,000 is the next psychological target that we can expect in Bank Nifty. However, within that, obviously, stock specific action is to be seen within the private banks, the Axis of Kotak or ICICI. So our sense that bank is likely to outperform as compared on the index levels compared to Nifty, and Nifty overall is likely to consolidate within the range between 23,200 to 23,450, 400 levels.
Fair point. We'll keep an eye out on that as well. You know, a lot of buzzing action on specific stocks. So we'll get to take a view from Arpit on those specific stock ideas now. A lot of these EV plays are buzzing today, Arpit. Ola Electric, Electra Green Tech and JBM Auto, the electric vehicles, buses focused auto companies. What's the sense that you have here? I mean, 5-7% of more on Electra Green Tech and on JBM Auto. What's the sense here?
If you see overall the product market and particularly about the EV theme as a play, so last couple of days has been seen a good traction in all these counters. So first, let's just talk about Electra Green Tech. So if we see the chart set of the Electra Green Tech, relatively from last couple of months, the stock was continuously falling from last almost 7 to 8 months towards from 2,000 levels to almost 1,100 levels. However, this month strong recovery is seen on the weekly and the monthly setup, and it is holding well above its 200 EMA. That is likely to be a major support. So if we see from the stock perspective, from a position wise, the stock is at a major level, has taken support, its major support zone. So I think from here on, the risk reward is quite favorable if we have a vision from 3 to 4 months perspective, with major support around 1,100 levels for an upside move towards 1,350 and then 1,450 levels going forward.
Okay, fair point. Keep an eye out on that as well. We were discussing the private banks and the large banking spaces, but PSU banks have also started to move a bit. Any suggestion here? Would you like to chase any momentum?
If you talk about the PSU bank as a whole, yes, definitely some uptick we have seen in these counters. But overall, the issue has been the momentum generally after a couple of days, rally the momentum fizzle out. However, if we talk about within the Indian private PSU banks, SBI would be a preferred pick. So relatively, the stock is in clear uptrend. SBI, if you see the chart setup on the monthly scale, strong recovery from its lower levels, a strong bullish candle on the monthly setup. On the weekly setup, the stock is trading in a range near its 200 EMA. But looking at the chart setup wise, definitely we can see slowly, steadily move towards 780, 800 zones, as financial has been a theme for last couple of months. So SBI would be a preferred and the safer pick within the PSU pack, with a major support around 730, 740 levels for an upside move towards 780 and then 800 plus zones.
Okay, we'll also go back to the private sector names. HDFC Bank is something that I want to revisit. It's hit an all-time high today. The market cap has crossed 14.4 lakh crores as well. Remember, HDFC Bank has been the only bank which has actually never seen a drop in annual profits. What we have also seen is that last 4 years have been rather muted, in terms of returns for HDFC Bank, and that's tested a lot of patience. But slowly and gradually over the last 1 year, the stock has moved up about 20-25% odd. Your suggestion on HDFC Bank now that it trades at 1872, would you still call it a good space to take a fresh entry on HDFC?
If I see from a long-term perspective, HDFC Bank, apparently last 3 to 4 years the stock has been in a very range between 1500 to almost 1800 levels, and this has been the story for major private whether it's HDFC or Kotak. So if I see the setup of the HDFC bank on the monthly setup, finally after almost a consolidation breakout after almost 3 years, the stock has given a range breakout above 1750 1770 levels, and the base of the stock is shifting higher. So initially the base of the stock was around 1400 1450, that has been shifted to around 1650 levels. And as you've seen, the stock is generally a slow mover, but definitely the upside is going to be open up in for next 3 to 6 months perspective, because we have been bullish on the overall banking and the financial pack. And definitely, so investors can definitely buy 30 to 50% at current levels, and then wait for some cool off at lower levels. But from a position perspective, we have been positive on this counter for 2000 plus 2100 levels from 6 to 9 months perspective. So all the buys were positive with major support around 1700 plus zones.
Absolutely, and these private sector banks have pulled up the Nifty pretty much higher now, with HDFC definitely contributing the highest points. And you can see 350 point of an uptick on the Nifty Bank. In fact, out of the 12 stocks on the Bank Nifty, you have 11 of them that are up into the green as well. So the banking names, as Arpit has been maintaining, is the space definitely keep on your radar at this point in time as well. Let's look at some of the other buzzing factors. Let's discuss the broader markets, mid and small caps. About half what percent to 0.6% of a move on the small caps today, even though the frontline index is just mildly up. Apart from JBM Auto, which we've discussed, Gains is again buzzing. AB Real Estate is also buzzing in trades. There is a lot of action on the pre-sales that the company has announced. In fact, that's definitely pulling up the stock higher. You have KEC International, Swan Energy, Nuvama, that's moving. Atul Limited, you have Trident, you have GE Shipping, NBCC, all of these stocks in the small cap basket that are buzzing in trade. For AB Real Estate, there's a Nomura report also with a buy rating and a 2700 rupee of a target price. They believe Q4 pre-sales of 57 billion rupees have been much higher than the estimates, despite the previous year's high base. The higher than expected figure has been driven by the Birla Arika, that's in Gurgaon, Phase 1, which has achieved a record booking with several other successful projects in Bengaluru as well. So that's also buzzing. We'll tackle the real estate separately, but small caps, particularly, Arpit, what would you say?
Actually, if we see last 2 to 3 days has been very good action across the mid cap and the small cap pack. Rather than on the index front, I would like to focus on the sector front. So as you've seen, a good update by the Sky also above monsoon are expected, and cooling inflation definitely bodes well for fertilizer and the chemical stocks. So if we talk about fertilizer stocks as a whole, so from last couple of weeks, in fact, the stocks have been momentum, but within that, two top picks would be SRF and Chambal Fertilizer. So if we look at the setup of this SRF on the monthly scale, a range breakout above 2700 level on the monthly scale. The stock has retested its previous breakout zone on the weekly scale. A strong rally from lower levels, and definitely positionally also we expecting this counter SRF going forward towards 3300 3500 levels position from 3 to 6 months perspective. So overall this counter is quite strong, in spite of market weakness. The stock is at trade live high that clearly indicates the strength in the counter. So for the major support around 2850 2900, the stock can head towards 3200 on the immediate basis. Another counter that we already talked about is we are discussing is Chambal Fertilizer, a classical range breakout on the monthly scale, clear pull and flag breakout above 550 levels we have seen last to last month, and from there on we have seen almost 15% rally. But definitely there is some more room ahead that we can expect towards 700 720 levels going forward also. So this should be a preferred pick within the fertilizer pack, as definitely the seasonality is also favoring and the chart setup is definitely strong, so we can be quite gung-ho about this two factors.
Okay, Arpit, let's also discuss IT as a pack. Of course, the sector is down, but after TCS, another major earnings that will be coming in is from Infosys, which is slated to announce its earnings today. Now, according to the poll from several analysts, they expect the second largest IT services firm to post a 1.4% quarter-on-quarter decline in the revenues in dollar terms at $4,871 million. In rupee terms, the revenue is expected to grow marginally by 0.9% quarter on quarter to 42,133 crores. And the EBIT, that's earnings before interest and tax, is estimated at 8,700 odd crore rupees, down again from 8,900 odd crore rupees in December quarter. Margins may also decrease, is what the expectation is, to about 20.7% from 21.3% earlier. Remember, the profit after tax, however, is expected to increase 6.9% sequentially. The constant currency growth for Infosys is expected to also decline by 1.1% on a quarter-on-quarter basis. Remember, TCS reported a constant currency revenue decline of 0.8%, so slightly worse than TCS is what the expectation is on the constant currency front. Of course, what will be most important to watch out for will be FY26 guidance. If Infosys decides to suspend the guidance citing uncertainty, that will be definitely viewed as a negative catalyst, and that's something that all the investors and analysts are really looking out for. Of course, deal announcements will be important to watch out for. The second key trigger to watch out for will be what will Infosys announce on wage hikes. Remember, TCS has already talked about a deferment of the wage hikes on that front. So this will be another key what to watch as far as Infosys earnings are concerned. Arpit, how about Infosys? What will you do here ahead of earnings, and what would you advise?
Sakshi, if we talk about first, I'll talk about the sector as a whole, and if we see currently, if we see the sector-wise, Nifty IT is brutally down in the last couple of months. Or the index is almost down by 30 to 35%, and that effect has been similar seen on the stocks across the mid cap and the small cap, as well as the large cap. So if we talk about the IT index, our sense is that going forward, definitely there are certain headaches for the sector as a whole because of the global exposure, and the sector underperformance is likely to continue. Having said that, we have seen a sharp corrective move, so definitely some rebound can be seen in couple of days as per the result season. So if we talk about Infosys as a whole, if we talk about the rally where it started, Infosys way back in May 24, that is almost a year back, it started from around 1350, 1400 levels, and again the stock has come back to its original level, that is a major support zone, demand zone for this counter. So from here on, as you're seeing good recovery in the markets and the broader market, so downside is protected as of now on the immediate basis. From a result perspective, definitely that would be a key level to watch out for. But on the level price action perspective, 1360, 1370 would be a major support zone. Whereas on the upside, a major hurdle is seen around 1460 levels. So closing about 1450, 1460 would definitely make some rebound in the stock in going forward. But till that time, the stock is likely to be in a range. And as of now, the expected range would be between 1380 to 1450 levels.
Okay. That's as far as the expectation on Infosys also goes at this point in time. Okay, Arpit, quickly help us understand. The first half an hour of the candle is now nearly out. What have you observed in terms of stocks and sectors? Where does one concentrate their focus beyond the banks and financials that we have discussed now?
Yeah, so as you've seen, almost half an hour has been done, and banking is holding well. Whereas in Nifty also, you've seen good recovery from the lower levels. So if I pull out the intraday chart also, Nifty almost made a low around 23 250 levels, and then we have seen good recovery of 60 to 70 odd points. Whereas banking is heading and trading near day high levels. So definitely from a setup wise, Nifty till it holds about 23 250 levels, we can see a move towards 23 500 levels. Talk about Bank Nifty, the immediate support is around 50 to 500 levels, and slowly steadily you can see a movement towards 53,000 levels. Definitely SFC and ICICI would be in focus because we have results over the weekend, and with us going forward, say also banking is likely to outperform, and SFC finally touch a new high after a very long time. So definitely we have seen some happy faces around, and definitely the momentum is likely to continue.
Okay, we'll definitely keep an eye out on that as well. Right. Okay, then Arpit, thank you so much for being with us in the morning edition today and helping us with your view on the markets, and of course helping us with the strategy both on the frontline indices, the Nifty and the Nifty Bank, and overall the key stock selection that you've marked out for all our viewers, which we will keep an eye out on. All right, viewers, we'll start to wrap up the morning edition of Market Today now. 23,364 on the Nifty. We are 35 points higher by 0.2% of an uptick that can be seen. The Nifty Bank is definitely outperforming the Nifty, 0.7% of an uptick. We've discussed all the aspects, private sector, PSU banks, financials as well for all of you. Both our guests do believe that bank and financials need to be a part of your core portfolio in case you want to hedge your portfolios at this point in time. This is the one that's really expected to do well from here on. It's a consensus buy, and all the analysts are really positive on banks and financials at this point in time. There is some green, of course, across even the broader markets, mid and the small caps as well, but it's a mixed action as far as the sectoral action is concerned today. Of course, IT is on the back foot. There is some nervousness as far as some earnings go. Infosys, Wipro, they will be coming out with the numbers, and therefore, one will be really cautious there. Auto space, after yesterday's strong move, is down by about 0.5%. IT down 0.25%. Metals down, and trade pharma also down. You also have consumer durables and oil and gas, some of the weaker links there. But mild positives being seen on FMCG, on private banks, on PSU banks. That's up in fact 1.2%. It's the leading sectoral mover at this point in time. So the banks and financials concentrate the moves today. Of course, on the Nifty, when we look at the kind of moves that we have, is now up by 2%. You have HDFC Life, Axis, Kotak Mahindra Bank, IndusInd Bank, Jio Financials as as the top movers. On the lower end, you have Maruti, Hindalco, Bajaj Auto, Tata Consumer Products, Sun Pharma, Hero Moto, Infosys, Eternal, all of them slipping in trade as of now as well. Well, we'll leave you at that, viewers, but do stay tuned on to Business Today Television as we will continue to track the market momentum for you throughout the course of the day. And of course, at 12 noon, I'll be back with answering all your stock related queries. Stock market experts will be taking your questions. So stay tuned and keep sending in all your questions to us.